IPO season is back, and companies like Anthropic and SpaceX are leading the race. Now, recently Anthropic went ahead and filed a confidential filing with the SEC as they prepare to go ahead and make themselves available to the public sometime in the near future. This is something we've all been waiting for quite a while now, if you're like me, saying, when can I put some money into this company? Because I'm trying to ride the wave with them. As we talked about just a couple of weeks ago, Claude has been dominating this past year, and they're not slowing down. This comes right around the same time when some of their biggest spenders like Microsoft and Uber are saying, hold up, we might need to cut back on some of this spending that we're doing with some of these AI companies because we're not seeing the type of results or utility that we thought we were going to get out of it. And maybe it's time to pull things back a little bit and focus on our own internal tools. This week, we're going to be focusing on what exactly is an IPO and why is Anthropic preparing to go ahead and do this now? What does it mean when these companies start pulling back their spending when a company is preparing to go public? And what does that mean for me and you? So grab your drink, take your first sip, and let's get into it. 3, 2, 1, we gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dikembe Smith, and this week, as we are sipping on some black coffee to start off this day, we are going over the recent filing from Anthropic where they just announced that they're preparing to go public, right? Like I said in the intro, it's time for me and you to put that money that we had set aside into this company, because I talked about this a couple of weeks, probably a month ago now, on the episode where I was talking about how Claude is taking over the AI race, right? It is another LLM that has been introduced in the past couple of years to compete with the likes of ChatGPT, Gemini, Grok, and they're eating everybody's lunch. And big companies like Microsoft, Uber, that were going ahead and investing into these companies and saying, hey, let's make sure that we're getting, our piece and utilizing these tools because it's going to help the overall productivity with our company. Now, like I said, some of these things have changed in the past couple of weeks, and people are reevaluating how much money should we actually be spending on products like this in a time like this, where maybe we should be cutting things in other areas as well, like we're seeing with companies when it comes to cutting certain jobs. And these are things that we got to ask ourselves, okay, what does that mean for the long-term outlook of AI as a whole? So like I said, we're going to be going over all of that today in this episode. And, I'm going to focus on Anthropic. I know I talked a little bit about SpaceX also, preparing to go public soon, but I'm going to do a whole separate episode about that, because when you talk about changing the rules and just not really slowing down, SpaceX they need their own episode. So that will be coming in the next couple of weeks, sometime this month. So stay tuned for that. If you're not subscribed as well, go ahead and subscribe so you guys can get the notifications for when new episodes do come out. So like I said, stay tuned for that one coming in the next couple of weeks. But this week, let's talk about Anthropic and what their IPO actually means. So starting off with what an IPO actually is. Now, an IPO is an initial public offering. Now, this is when a company that has been private, like Anthropic, for years and years and years, they've been raising money from private investors who have said, oh, I like the idea that you have there. Let me go ahead and, put $1 million, $100,000, $500,000, $20 million, $1 billion into the company and see what you guys do over the next couple of years. And then when the time comes for you to go public, they get their money back, right? So that's what happens with an IPO. Companies go ahead and they get their paperwork in order. They present it to the SEC and say, hey, this is what's been going on right behind the scenes for all the time that we've been private. Now we're preparing to make ourselves available on the stock market so people can invest in us as well. And this is what we have available. So this is where you'll start saying, okay, well, what is the price of per share going to be? Are people actually going to be buying into this company, or is it going to be a massive sell-off when you actually see it go public? All of these things are where you see things get very exciting from when a company goes private to public, right? A couple of years ago during the pandemic time when money was flowing crazy, we saw a lot of companies that were going public, a lot of tech companies in the space that said, hey, while the money is still available, let's push into the public markets and continue to do whatever we can. So, companies like Coinbase, companies like Robinhood, we all saw them push to go into the public markets. And, some people might have invested early on and been a winner. Some people might have invested early on and said, wait, this company just continues to go down and down and down. When are things going to turn around? So that's something that we also got to consider when it comes to investing in IPOs as just regular people. And this is not the basis for any investment advice. Don't try to sue me if you do this, if you invest and it comes back and bites you. All right, let's all stay educated. But one thing you want to pay attention to, and you can research this and say, hey, Claude or ChatGPT, give me a list of the last 20 companies that IPO'd here in America, and what were their performance over the first 6 to 12 months after they went public. And I think you'll be surprised to see, okay, well, did all these companies do really good? Or is there a certain trend when you look at it and say like, oh, most of these companies tend to go down for the first 6 months. So what should I do? I'm always listening and researching things that, just keep me more informed. And when I'm listening to people who are very wealthy and they've gone through these cycles and they have seen, okay, this is the thing you want to pay attention to, this is the thing you don't want to go ahead and do, this is one of the first things they're recommending, right? Pay attention to what that investment cycle looks like for these companies when they go public within that first couple of months, within that first year. And don't let yourself get stuck holding the bag, like we talked about the other day, when some of these things go down and these, the investors, the early investors pull out their money, right? Because like I said, for an IPO, an initial public offering, a lot of this is going to be so private investors, the early people, can get paid back, because they've been waiting for years to get their return, right? Their money has been tied up and they haven't been able to pull any sort of profit. So now they're saying, okay, boom, now everything's public. Let's go ahead and sell off if we're not planning on keeping everything locked into the company, and then we'll be good to go from there, right? And then maybe we'll buy in later or whatever it is once the market truly determines what the value is. But these are things that we got to consider. And I know it sounds like a lot, which is another reason why why people sit on the side and don't dabble with these things, because you start reading and looking at all and it's like, man, where do I even begin? We're in 2026 now. We're talking about AI. Use AI. Whatever simple question you have in your mind. Hey, how do I start a brokerage account? Hey, how do I invest once this thing goes public? It will give you the blueprint. You just have to be curious enough to ask the questions and make an attempt. So let's get into what's going on now with the spending with the biggest companies that were investing into them, right? The companies like Microsoft, companies like Uber, that were utilizing these tools to make their own employees, their own workers more productive. Right now, Microsoft, for instance, went ahead and had a team of their engineers that were working in, I believe it's their experience and devices department. And they're the ones who focus on tools like Microsoft Teams, those things within their suite. So they were realizing that, okay, they're spending more and more money for the Claude usage, because if you're not familiar, Claude is basically like, okay, you start off with, and most of these LLMs, you start off with the basic amount, say maybe $20 a month, like what I do. But if you get to a point where your usage, all your tokens get used up, you have to continue to pay more, right? So it's paid to play. So let's say, okay, I've used up 20, maybe I want to add another $10 because I just need to get through the day for the work that I'm doing. Or maybe I'm working on a project, building out a site or something like that. So I'm going to go ahead and, plug in another $10 into it, and that'll give me more tokens to use. Now, these companies are realizing, hey, we're buying up more and more and more tokens, and we're not actually getting what we thought we were going to get out of it, right? It's almost like if you go to an arcade, you spend $20 on tokens just to get that one prize out of the machine, and you run out, and it's like, wait, I know what I'm going to do. I'm going to go get some more tokens, because then I'm going to win the prize. You do that 2-3 more times and you still don't get the prize you thought you were going to win. So what do? Do you keep doing it thinking that something's going to change? Or do you reassess your strategy and say, let me take a step back and come to the table once we have some things reevaluated? And one thing that they are pushing their team to do is utilize their own AI products, right? Because it's Microsoft, huge tech company. So you would ask yourself, well, why don't they just have their own AI tools? They do. The problem is their engineers are pretty much saying it's just not as good as Claude. So we're going to go ahead and double down and utilize these things because it's night and day. It's apples and oranges, right? So Microsoft is saying, we're going to pull the plug on it. Let's go ahead and utilize our tools that we have here. Let's build up our own internal AI infrastructure, so we're not just spending millions of dollars a month to go ahead and utilize somebody else's tool. Now, switching over to Uber, we saw the same thing happening, right? Uber is saying, okay, we increase our AI usage, but we're not seeing the type of productivity return that we expected, right? Maybe we're seeing, people able to knock out work a little bit faster, but as far as the increase in revenue, they're not finding that connection to say, okay, we're utilizing this tool and it created this new line of revenue for us, or this new product that now allows us to make even more money. I think what a lot of companies are going through is saying, okay, we have rolled out AI, and instead of it making us more money from a new product or a new thing that we put out there in the market, we're just now realizing we can just cut back on certain areas because it's just more so of an internal productivity hack, right? You're just able to turn one employee into three. So let's just cut those 3 employees, right? Cut those other 2 people that would have been needed and then just make that the job of one person. And once we shake all that out in the future, then maybe we can think about what a new product or thing would be. But that's the thing I'm sitting back and asking when I look at a lot of these things. Yes, everybody's using AI to speed up, things like that and being able to do work more efficiently. But when you're doing more work efficiently, it saves you time to then do what? And that's where I'm stuck at, right? And saying, okay, well, now that you have this time, what are you going to create? So a company like Uber, who isn't ready to pull the plug on all the drivers and say, hey guys, sorry, but we don't need you driving anymore. We're going to switch you over to doing automated task work. And if you think I'm just making that up, there's an interview where Uber CEO said that's, he doesn't know what the drivers are going to do. We're planning on doing this type of work, kind of, like almost like a task rabbit kind of thing, where it's like, hey, if you want to do this on your computer, you can do that. Or if we have tasks to do through, through Uber's system, do that. So they already have plans about how they'll convert over, and maybe keep some of the drivers employed. But for the most part, they don't have much to put out there into the market right now from their introduction of AI to their own company. So like I said, companies like Uber, Microsoft, they're saying, let's tone it down a little bit. We're maybe speeding into this a little bit faster than we should have, and we're not seeing what we thought we were going to out of it. Now, that brings me to my final point for this episode, which is this info that came out from Gartner. And Gartner is a research firm that companies pay to basically forecast where tech is heading, right? And Gartner said that they project about a quarter of big tech and AI spend to be cut going into 2027. Now, this is a big significant thing because once again, everybody's talking about the AI bubble and whether or not all of this is kind of just cyclical and not really having any sort of, like we talked about, any real results. Going back to Uber, you guys remember when Uber first came out and prices were super cheap? It almost seemed like you can get anywhere for like $10 a ride. Well, that's because a lot of it was subsidized. A lot of it was early investor money that was keeping things super fluid, right? They didn't have to really worry about the economics of now when you're in the public market. Fast forward to today where you go ahead and try to Uber anywhere, you're dropping $15-20 to go 2 miles, 3 miles down the road. And that's because things have hit reality now, right? You're no longer in that experimental phase of let's see if this company and if this idea works. You're now in the phase of we now have to pay money back to shareholders and investors on a quarterly basis who are expecting consistent profitability and consistent growth. So what do we have to do that? Okay, prices need to go up, things need to be cut. And that's where, coming back to me and you, what should we expect now going forward? One thing I think we're going to continue to see is the prices for these things on our level, at our tier, right? Like let's say the basic monthly cost for things like Claude and ChatGPT. I think they're going to start changing those prices, right? We may see Claude go up to maybe $25, $30, $40 a month because they're going to realize people aren't going to stop using it. I'm telling you right now, if they went ahead and double Claude to $40 a month, I'm not cutting it, right? And I know a whole bunch of people who would probably say the same thing because the level of productivity it brings into my life at my level from where I'm at, it does allow me to go out there and do other things to, once again, if I'm the amount of time it used to take me to just go through an episode from recording to full post-production and now distribution to where I'm at now, it's crazy. Like I said, just the amount of time it used to take to research ideas to where it's at now. That $40, that's 2 hours done. It's such a no-brainer to continue to use these tools. And that's why I say to people who haven't really dabbled into it, utilize it. And you'll see why certain people, certain companies are going crazy over these things and are pouring more money into it, and not only pouring money into these other companies, but figuring out, hey, how do we build this thing into our own system, right? How do we take all the context of what it is that we do here, all of the training materials, all of the transcripts from all of our sales calls from years and years and years, interactions that we have with clients, our relationships, and plugging it all into our AI systems and seeing what it can analyze, what type of connections we might have been missing, so we can go out there and make more money, to be more productive, to be more present in our day-to-day lives and our families' lives and our friends' lives. All of this starts to become a lot clearer when you get curious with these tools and start dabbling with it and saying, yo, let me start fooling around with this, because I really haven't yet. And like I said, this, even though Gartner said that things are going to be slowing down, it's not going anywhere, right? It might be slowing down. Maybe they're going to pull back a couple billion next year, but people are spending billions and billions of dollars a month now on AI, and that isn't slowing down. It may shift slightly on what it looks like, but this is the future and it's here to stay. So you guys let me know what you think about this recent news with Anthropic, with the recent filing. Like I said, stay tuned, subscribe for the episode coming up on SpaceX and what they have going on. So until next time, stay tuned, stay curious, and as always, enjoy your first sip.